Hey, good morning, everyone, and good morning, Ehren.
Hello, nice to see you, Sean.
Yeah, welcome to the stage. Ehren and I go way back, I guess, when he was vice president at Infrastructure Ontario, and he formed a construction industry advisory roundtable. And in my role as Ontario Construction Secretary, I was invited to participate on that roundtable. So thanks so much for that and for your engagement with the industry. And if you see Ehren and I tomorrow and we're weeping, it's because the Leafs lost tonight. Just so you know.
Well, now it's also going to be because I'm nervous about cybersecurity because Rob just scared the heck out of me with the last few minutes.
Right. Well, there you go, Rob. You may have a client at Canada Infrastructure Bank. Ehren, let's just get right to it. We hear a lot about Canada Infrastructure Bank, but I do think that there is still maybe some more work that could be done around the understanding of what the bank actually does and what investments it makes and how does it operate. Like, it's not a traditional bank like one of the big six banks, but it's Canada's Infrastructure Bank. So just maybe give us like a Coles Note version of what Canada's Infrastructure Bank does and how it works.
You got it, and thanks, Sean, and it's nice to see you again. We do go back a long ways. I worked for the first 15 or so years of my career in the private sector on big infrastructure projects, in the energy sector, the mining sector, and I was a project manager getting stuff built. So I have always, I'm not a tradesperson, but all of my career has been intimately linked with getting stuff built and working closely, therefore, with the whole chain from finance. We're called a bank, all the way through execution, and those kind of partnerships are the only way we get stuff built. So sometimes I might seem weird. Why do we have a bank joining us today? But it's because we are joined at the hip, all of us, if we want to get more stuff built in this country. 10 years ago, I left that job. I left the private sector, and I joined government, first in Ontario, at Infrastructure Ontario, and then I came to the CIB 2 years ago. The CIB was created by the federal government about 5 years ago. The idea was we got to get more built in this country. It was interesting listening to the previous panel in nuclear, by the way. They were talking about what are the barriers to getting stuff built. We have some big ones around regulatory process, around availability of skilled trades, especially as we look to the generations ahead. But one of the problems we got is not having enough money, at least not through our traditional means, to pay for all the infrastructure we need. And there's two things happening. Number one, we failed to invest for decades. We underinvested for decades in our transit systems, in our ports and our rail systems, in our clean buildings, in our electricity generation sector. After the 60s and 70s, there was a huge slowdown in our investment. So that's problem number one. We got to catch up. Problem number two is we need to adjust for the climate that we face and greening so much of our world. And think of electricity, just to use one example. We've underinvested in electricity. We got a bunch of plants that are nearing end of life, and we're doubling or tripling our demand for power in this country in the next 15 years or so as we electrify vehicles, as we electrify some of our heating. So it's like we got to replace the stock we got, and we got to double or triple. Okay, so Canada said we need a different way to do that. We can't just do that through the tax base and through paying for stuff publicly. So the CIB was created. We were a crown corporation. We're owned by the federal government. We were given a pot of money, $35 billion, it's a lot of money, to invest in infrastructure projects. We make loans, so it's very different than typical government grants. We make loans or equity investments in projects. So if you were a renewable power project and you were trying to get off the ground, or a hydrogen project, I was listening to the Enbridge conversation earlier, trying to get off the ground, we could make a loan to you. Or if you were a small modular reactor, OPG is a partner of ours. We've invested in their small modular reactor. What we're trying to do is, by making a loan with government capital, because it's government money, we're not one of the big banks, we're not a real bank, we're in the typical sense of the word, we can lend money for longer term, or for lower interest rates, or with more risk sharing. And it's actually the last one that's the most important, where we can actually be very different than other lenders, and with that money, help OPG move forward with their SMR project, help a renewable project or a hydrogen facility get going. So help build carbon capture pipelines so we can capture carbon and put it in the ground. So we're investing Canadian taxpayers' money, we're lending it to unstick projects that are good projects, but very expensive, have really long paybacks or really uncertain paybacks because they depend on what's the market for green hydrogen going to be 10 years from now. We don't know. So business owners might be a little bit nervous. So we can make that loan and ride with them through that project development. So it's a new tool in the toolkit that the federal government created to try and get more stuff built.
Well, great. Well, thanks, Ehren. I think that the audience really appreciates that overview of the bank. And when I look at the portfolio of the investments you've made quite a few with zero-emission buses, for example, with municipalities, so they're able to borrow money from the infrastructure bank at an interest rate less than what they would by raising their own capital. But when I look at the private sector investments, maybe you could talk a little bit more about the private sector investments and what kind of areas. You mentioned the SMR with OPG, but what kinds of areas are you looking at, and what kind of job creation can we expect out of some of those investments?
Great question. So yeah, so we are really a public and private partnership, in the true sense of the word. So we have some of our investments, like you say, City of Ottawa across the river, we've loaned them money to buy a bunch of electric buses. The logic there is electric buses have savings. They have savings in their fuel costs over the life of them. They have much higher upfront costs. So if I make you a loan, City of Ottawa, Waterloo region, where you used to play a role, you can go ahead and buy those buses and you'll pay us back out of the savings. So rather than the taxpayers of the City of Ottawa having to pay for that higher bus cost, we'll finance it and we know we'll get paid back out of diesel savings. So that's the public side. But on the private, to your point, we're investing with green energy companies, with power transmission companies, generators. I'll give you an example of a project we announced last week that's here in Quebec. It's a biomethanol facility. So this is taking biomass waste, so forest product waste, construction waste, and building some hydrogen catalyzers to make clean hydrogen, mixing them together and creating a biofuel that can replace carbon-emitting fuels. It's at zero carbon because it's using waste product and green hydrogen because the hydrogen's made from the Quebec electricity grid, which is clean. And we're selling that. The company we're investing with is called Ehren. They're a really innovative company, Canadian-based, and they've got partners like Shell and Proman and a number of others who are partners in that project. So we made a loan to that project to make it go, because what they were sitting there saying is we've got this project, it's about $1 billion project, it employs thousands of people, not just in construction, but in the next 30 years of operating the plant, and thousands in the peak and then hundreds as it operates. And they say, we want to do this project, but it's expensive up front and it's uncertain because we don't know how the market for a clean methanol fuel is going to evolve. So we make them the loan and they're going to pay us back over time as their business performs. And that's the kind of loan they couldn't get from a traditional bank. So that's an example. We've done, to your point, we've done 46 investments so far. That's one of the 46. Buses in Ottawa is another of them. But we've done that across the country. We're in every region. Projects as small as a $6 million wastewater treatment facility in a First Nation in BC, as big as $1 billion with OPG on SMRs, and lots of stuff in between.
And what's the total you have invested right now?
So we're almost at $10 billion of taxpayers' money. So 9.7 billion was what it was at the end of March. And the project's total value is 27 billion. So when we put money in, there's other levels of government putting money in, and there's the private sector, our partners. So for our 10 billion, it's almost getting close to $30 billion worth of projects. Some of those are purchases, buying buses, but most of those are construction projects, building new port facilities, building new clean fuel facilities, building transmission lines. So that's starting. Now, look, when I say we got 10 billion in, Sean, those are loan agreements we've signed, and now the money is just starting to flow. We've signed almost all of those in the last 2 years. So detailed engineering is getting finished, long lead items are getting ordered, construction is starting, but that money is going to flow over the next 3 or 4 years as the projects advance. So you're going to see a wave of jobs coming out of those investments.
Can you tell me a little bit about some of the other investments you've made? For example, I know you've made investments in EV charging stations, and so I know our electrical contractors in the IBW, for example, have been busy training up their members on how to install EV charging stations. And then the retrofit industry, for example, there is a whole bunch of work that needs to be done in retrofitting our building stock right across the country, and that employs multiple trades, IBW, insulator, UA, sheet metal, just to name a few. So can you tell us, do you have a particular focus? Because our focus of our conference is on building jobs for tomorrow. So do you have a particular focus at Canada's Infrastructure Bank on this transition to net zero and making these investments in the transition and decarbonizing our economy that create a lot of jobs for us. But tell us a little bit more about that.
Yeah, thank you. So look, when the CIB was created, as I said, we're just one. Think of we're just one tool in a pretty big toolkit. And the government's idea was there's a bunch of infrastructure, like the examples I've been giving you, and I'll talk about your examples because they're two more really good ones. There's all this infrastructure in our country that actually can pay for itself. It's just, it takes a long time and it's risky. There's a lot of infrastructure that doesn't. Our public schools, our hospitals, our courts, which was my old job, it's all really important, that social infrastructure. And that does require public funding to get done, like traditional government funding. But there's this other sliver where you can create partnerships or you can create revenue streams, like the savings on the buses can pay for themselves. So we're focused in 5 sectors that meet that profile. So those are transit systems, trade and transportation corridors, rail, ports, inland ports, logistics, that sort of thing. Third, broadband to connect every Canadian with high-speed internet. There's about 10% of us who don't have that yet. Fourth, clean power, both generation, transmission, battery storage. And fifth, what we call green infrastructure, which is everything to do with carbon capture and storage, clean fuels, building efficiency. So we're focused in those areas because they have some way to at least partially pay for themselves, which we can put our money in and then we'll get it back. We're also focused in those areas because those are areas of infrastructure that deliver positive impact to Canadians. Because like infrastructure is a funny word, right? What the heck is it? It's the Wi-Fi we use, it's the roads we got here on this morning, it's the electricity that's powering our fancy mics. It's all around us, yet we ignore it. We're focused on infrastructure that delivers benefits to Canadians, benefits like more economic competitiveness through better trade. So to pick an example, when we look at investing in a port, the way we look at it is, how is that going to help Canadian businesses more competitive? How is that going to help Canadian households get the goods they need quicker and cheaper? So we look at it from a competitiveness lens, an economic lens, and second, we look at it from a climate lens. How does it help us make the green transition? And when we make an investment at the CIB, we're totally different than other banks. We're a taxpayer funded. We're not here to make money. We're here to get stuff built and to get those positive benefits. So that's actually how we evaluate investments. So 2 of the areas you talked about, both super important to us. Building retrofits, we started doing this a few years ago. We have made, I think, 8 investments this way so far, with either big building property holders or with aggregators or energy as a service provider. Johnson Controls is a partner of ours. Amoresco is a partner of ours. Sofiac here in Quebec, who are doing energy retrofit work, trying to help building owners get to net zero. But we've also done investments with people like Dream or out west Avenue Living, who own a bunch of rental apartments. So sometimes it's with building owners themselves, sometimes it's with more of the service providers. But what we're saying is, if you can go do a program of energy retrofit across a bunch of buildings, in the HVAC system, do solar PV, you could do building envelope work, anything that's going to drive energy efficiency, we will make you a loan to do it. And the more energy efficient you make the building, the cheaper the loan will be. So our interest rate actually slides as the building is more efficient. And so to your point, that's creating lots of work in the building trades, I think is excellent. And it's creating at the back end of it, huge improvements in the energy efficiency of our building stock. And buildings make up a quarter or more of our emissions in Canada, and we got to do something. It's great. As someone said recently at a panel I was on, Sean, 80% of the buildings that will be part of meeting our 2050 emissions goals exist now. Yeah. Right? So if you don't do energy retrofits, you can do new buildings, it's great, but you got to do something on the retrofit side. So we're doing that, as I said, and if your members know of either building, and Modern Niagara is another partner of ours, by the way, in that sort of work. So we're finding lots of partners eager and willing to do that. You talked about EV charging, new thing, we've made 1 investment there, announced it a week or 2 ago with a Quebec-based company called Flow. We'll be doing more of these soon. This is to accelerate the rollout of chargers. And so the skilling up of members of yours and our focus is really aligned, because what we're saying on the EV chargers is, if you just let it happen on its own, it'll happen. They slowly, it's like gas stations, there'll be more cars on the road, and whether it's traditional providers or not, someone is going to see a business case and do it. But it's going to be bit by bit. And our view is, how can we really turbocharge this? So we're making loans to companies saying, go out, build out your charging network across the country. It's going to help vehicle adoption. It's going to help people get over their range anxiety. it's like a self-fulfilling, a chicken and egg problem here. Right. So build that network so that there are more EV users. The more EV users, the more your chargers will be busy. So we're making loans. They're really low interest. In fact, you don't start repayment until the chargers are actually starting to get customers out in the market. Right. And so that's allowing people like Flow and like some of the traditional, I'd say, carbon fueled-based operators who we're talking to, it's going to help them to build out their EV charging way faster. And so, yeah, get ready. I'm glad your members are doing that work.
Great. Well, thanks, Ehren. I know we're coming to the end of our time. It's gone by so quickly. But, we are obviously building jobs for tomorrow. We're about jobs. And so you've given us a really good overview and a snapshot of some of the projects that you're investing in and what kind of impact that will have on creating work opportunities for our members and for our contractors right across the country. Just two things, two components to this last question. One is, what does the pipeline look like going forward? Are there enough proponents coming to you and asking to borrow money? So is that robust? And the new legislative changes, that created more impetus for projects to come forward and look for financing? And then the second component to that is, what about transformational projects for Canada? We've talked for years about repositioning our electricity grid rather than going north-south to going east-west. And then also major projects like, for example, in Atlantic Canada, Gull Island. So, maybe you can tackle those two components of that question, Ehren. That'd be great.
Okay, great, and I'll do it fast. So first, we're seeing incredible demand, and I think I'm sure the people in this room, we're really feeling that picking up of momentum. And I think each time, so like EV charging, just using the example we were just talking about, when we announced last week our investment with Flow. So we're lending them $200 million. They're also putting in a whole bunch of their own equity. So they've got skin in the game too. So they're borrowing from us. They're investing their money to do this build out. Every time we do one of those, Sean, 5 other people call and say, oh, we didn't know you could do that. Can we do that in our region? That's great.
Did you say $200 million in Flow?
Yeah.
That's over how many years?
4 years.
4 years.
Yeah.
That is a significant investment.
It's a significant investment. And it's, as I say, I think the first of several, because when we do one, so a different example, we're working really hard to find we're working with a couple of people on what I think will be the first good new carbon capture and storage project. And again, when one of those goes, I do think the floodgates are starting to open, Sean. So yes, we see a huge pipeline. I think to the comments on the nuclear panel from before, Canada's getting there. I think we're making some real progress. Like the IRA is like the 900, what's that? The 1,000-pound gorilla. Oh, yeah. But in Canada, we are doing it differently. But the ITC, the tax credit regime that Canada's introduced around renewable power, the fact they've extended the tax credit to electricity generators, like there are a number of tools and then a loan from us, you put it together and it's actually, I think, pretty damn effective. It's a different way to do it, but on the other hand, in some ways, it might be doing, as the other panelists were saying, we might be going faster. So yeah, on your first question, we see a ton of flow, and I do think that in some ways, money's one of the challenges, but it's only one. The other challenges are around getting projects permitted and getting social acceptance and regulatory, and having the human capacity to build them. So if you think of those 3 legs of the triangle, we're working on the money side of it. We got to get all 3 sides if we want projects to go. On your question about transformational projects, it's something at the bank we've spent a lot of time talking about. And what we say is, it's like everything in life, you gotta think about it like a portfolio. You gotta hit some singles and doubles, and you also gotta spend some time trying to hit the grand slam. So we're talking I love your example of east-west transmission. So whether that's in Atlantic Canada or across Western Canada, we're spending a lot of time talking, what's it gonna take to build a true east-west grid? That's very different than my Flow example. Flow is an entrepreneurial company. They got a growth plan. We can invest in it. Right. It's the others are much more multi-stakeholder, multi-party, and they take time. Mm-hmm. And so what we're doing as the CIB, we're providing term sheets and opportunities to borrow for those transformational projects. We're trying to convene people to talk across regions in your transmission example. Same thing with some of the big transit projects across our country. Rail between Quebec City and Toronto, we've been talking about for a while, for instance, and finally getting some momentum. So our view is, you got to keep pushing those along. They're kind of magic moments. They don't happen every day, but they're going to happen. You got to invest the time and the money in them. So we make early seed investments called accelerator investments in some of those projects to do engineering or to do work to get them ready. They might take a year or 2 or even 5, but you got to move them forward. And while you're doing that, you got to put some runs on the board with a building retrofit, with a CCUS project, with a EV charging network. So that's how we're approaching the market.
Excellent. Well, thank you very much, Ehren. I want to thank you for your dedication to this industry, your work in Infrastructure Ontario, Canada's Infrastructure Bank, and the work that you're doing to help build Canada. And also thank you for your engagement with Canada's building trades and participating in our board meetings and updating our board on the activities of the bank. And we look forward to strengthening that partnership and that relationship going forward. Please, a big round of applause for Ehren Cory.
Thanks,
Thank you
Sean.
very much, Ehren.
Thank you.